Right. I welcome you all, guys, to our third lecture for macroeconomics. I'm just going to highlight a few points before we start at 7 o'clock. So, like I was encouraging everyone to come in early because I just want to make sure that by 8 o'clock we have started our class. So, today is the last day for the free classes that I was hosting. Remember, we started hosting some classes from the 16th of August and up until today. And I highlighted to you guys that we do paid classes, which are classes that we do. There's a timetable that I sent out, I think, to the guys that have already paid. That is, if you are doing advanced diploma, these are the days that we are meeting. If we are doing first year, these are the days that we are meeting. If you are in need of this timetable, you can send me a WhatsApp message. I will send it to you. Then, starting from tomorrow, I will only be sending the links to attend the classes and the videos, recordings of the classes to those that have made payments or that have made arrangements to join the classes. So this is also just as a reminder to the guys that are doing advanced diploma in business studies. You guys have got assignments that we need to start working on. So from tomorrow, for the guys that are doing the diploma in advanced business management, we will be doing the assignments. That is from tomorrow for the next 2 weeks, we'll be focusing on the assignment. I will update in the groups and etc. as we go along how we are going to be going about it. But it's just, I thought, let me just make the announcement now so that everyone is aware. For the first years, your quiz or your assignment is not yet due. So we are going to deal with the quiz when they open for the first years. We'll talk about it a little bit later on. For now, it's not really critical. But for the guys that are doing advanced diploma, I believe that that is a little bit critical. Then for those of you that have not joined, the cost is 800 Rand for each module. And this and this is for the entire semester, right? You can pay in installments. So I think I've done my introduction. We can go straight to what we want to talk about today. So we have, okay, let me just remove my video there so that it does not distract us. So we have talked about what economics is all about, right? We have introduced the subject of economics. We have introduced the definition of economics, where we talked about the issue of studying the human behavior, studying how people make choices when they are faced with unlimited ones and they've got limited resources. Then we talked about the differences between macroeconomics and microeconomics, the differences between positive economics and normative economics. Then we looked at some of the key terms of economics. Then after that, we delved into the three economic problems, which is what to produce, how to produce, and for whom to produce. Then last week when we met, we went into the production possibility curve, where we showed the diagram and the meaning of different things on that particular diagram. Specifically, how you identify efficiency, how you identify inefficiency, how you identify unattainable resources, how you identify opportunity cost on that particular diagram. So that's what we were doing last week. And then we talked about how you can increase, right, the opportunity, how you can increase the production possibility curve. Sorry. Yes, how you can increase the production possibility curve and how you can decrease the production possibility curve based on the change of the resources within an economy. All right, so today we want to look at a very short topic and then we are going to do a bit of revision of some of the things that we have covered. So that's what we want to do today. So maybe the lecture will be about 30 minutes long, and then the remaining 30 minutes we'll just do a little bit of a revision so that we can just catch up in terms of what we have covered so that we can see if we are on the same page. All right, so today we want to look at what is called the circular flow of income. So when we are looking at the circular flow of income, in every economy, there are different role players in an economy. There are what we call households, and there are what we call businesses, and there is government, and then there is the foreign sector. So when we are talking about households in an economy, we are talking about maybe one individual. For example, James is a household. Or we are talking about a group of people who are living under the same roof. For example, the family of James, the wife of James, his children, his aunties, his uncles, everyone who's staying under one room. The reason why we refer to them as households is they make the same decisions. So James can make a decision to buy a car. But if James is a family man, the decision that James is making will also be affected by the people that are living under his roof. So the decisions that are made by either one individual or that are made by a family, we consider them to be household decisions. Now, when we are dealing with households, there is one specific issue that is very, very important. In economics, now this is up for argument, but in economics, we say the households own the factors of production. What do I mean by that? I am saying, remember the factors of production, that is, or maybe just to ask so that we make sure we're on the same page. Do you guys still remember what are the four factors of production? It's a question. What are the four factors of production?
Land,
Yes.
Land,
Land, capital,
land,
entrepreneurship.
labor, entrepreneurship.
capital,
Yes, that is very correct. So, land, right? Capital, entrepreneurship, and labor. So, those are our four factors of production. So, according to economic theory, those things belong to the households. In a normal economy, those things belong to the households. The households are the people that can supply labor, right? So if you want workers at your factory, where do you go? You go to the households. They can supply you with labor, right? If you want entrepreneurs, where do you go to get your entrepreneurs? You go to the households, right? You go to the families. That is where a person who's born who's got business skills who can become an entrepreneur, right? So households supply us with entrepreneurship. If you want land, where do you get the land from? You get it from the households because they are the ones who have the land. They are the ones who have the title deeds of that particular land. So if you want a piece of land to establish your factory, you have to look for a household that owns that particular piece of land and then buy it from that household or rent it from that particular what? From that particular household. Then if you also want capital for your business, if you want capital to invest in your business, again, you have to approach the households are the ones that hold that particular capital. So, this is a very, very important concept. Households are the suppliers. I want you to, if you're taking notes, underline that word because you're going to see it in an exam one day. Households are the suppliers of the factors of production, right? Then in the same economy, you're going to see what we call businesses, right? In economics, we also use the word firms. It means businesses or companies, right? So what are firms? Firms uh, uh, are the institutions that are responsible for production within an economy, right? Firms take the factors of production and produce goods and services, right? So because firms take factors of production and consume goods and services, so we say firms or businesses are the consumers of factors of production. Right. So it means that a company, if it wants to manufacture shoes, it has to go to their households and say, can I have labor? It has to go to the households and say, can I have capital? So it is consuming the factors of production. So that is firms, right? So they are the consumers of the factors of production. Households are the suppliers of the factors of production, but firms are the consumers of the factors of production. And why do firms produce goods and services? The reason for that is they want to create profit. That is the reason why they produce goods and services. Then within the same economy, we also have.
Sorry, James. So to interrupt, you say firms are what?
They produce goods and services, right, through the consumption of factors of production in order to create profit. All right. So that's firms, that's businesses, right? Then within the same economy, we also have got the government, right? The government creates the environment, the legal environment, right, in which an economy can operate. Right? They create the rules like the Companies Act, the Labor Law, Employment Act, and all of those sort of things in which an economy can operate. That's number one. Number two, the government provides for public goods. Remember, in lecture number one, I explained to you guys what are public goods. Right? So the government provides public goods, such as the South African police, the South African defense, our national roads, our free public health care, and so forth. So that's the responsibility of the government. And how do they do that? They do that through what is called taxation. They tax the citizens of the country, they collect money from them, and then they use that money to provide public services. So that's number two. Then the government also, they correct what we call market failure. Right? We're going to do this like at the end of the semester and discuss more what is market failure. But for you to understand what is market failure, let's talk about something that is very simple. For example, we all know that smoking is harmful for your health. There's no argument there. Even if you're a smoker, there is no argument that smoking is harmful for your what? For your health. There's been studies that have been done that have been proven that smoking is not good for you. But we continue to smoke. So what the government does is, because it knows that if the country promotes smoking, right, if it lets the businesses advertise people should smoke, it is good for you and whatnot, businesses can make money out of it, but it is dangerous for the people within the economy. So that is a market failure. It's an undesirable product that is being sold to consumers, and the consumers end up addicted to it and they buy it. So the government then introduces maybe a tobacco levy or a smoking tax. So which means that instead of your cigarette costing 1 rand, your cigarette end up costing 5 rand. It is more expensive. And also the government puts a law that says on every smoking package, you should write that smoking is harmful to a person's health. So what they are trying to do is they are trying to reduce people smoking within an economy because it is bad for them. So that is the job of the government, to correct market failure, because it is a market failure. Because if the market had not failed, that product should not be sold because it is harmful. But the market has failed, so that product is sold. It's the same thing with drugs and all of those sort of things. So that's part of the government's duty, right, within an economy. Then lastly, we have the foreign sector. The foreign sector does almost all of the things that are under households and all of the things that are under businesses, because the foreign sector is basically another country. When I'm saying foreign sector, we are talking about Botswana, we're talking about Namibia. So Namibia can supply us with labor, land, entrepreneurship, and capital. Namibia can supply us with businesses that produce products at the end of the day. So the foreign sector basically does everything except the government stuff. So those are what we call the four major role players within a market. Now we want to look at how do these role players within this market interact. How do they interact? That's what we want to look at. All right. All right. So the interaction of these major role players is because of what we call the major flows within an economy. So there are three major flows within an economy: what we call the production flow, the and what we call the spending flow, and what we call the income flow. So the production flow, the spending flow, and the income flow. So those are the three major flows within an economy. So when we are talking about the production flow, we are talking about the flow of goods, products that have been produced, right? And the flow of resources, right? In order for us to produce. So, for example, we are saying that within an economy, there is a flow of land, labor, capital, and entrepreneurial skills from the households to the businesses, right? And that same flow goes back again to the households when these businesses get the labor, when these businesses get the entrepreneurial skills, they produce products. They produce heaters, sofas, food, books, computers, and these products flow back to the households. So that is the production flow, where we see that there is certain resources that come from the households, and these resources go to the companies and they are used in production to create products. So that is our production flow. Then we have what we call the spending flow and the income flow, which is the flow of financial payments, right? The spending flow and the income flow are the flow of financial payments. So what do I mean by that? I am saying that if we produce goods and services, just as an example, all right, or let's start with the production, right? If we want to produce as a company, right, this is a Tiger Breeds. They want to produce some products to sell, right? They want labor, they want land, they want entrepreneurial skills, they want capital. They go to the households and they get those things. But the moment they use those things, they have to pay for them. If you get labor, what do you pay? You pay a wage rate, you pay a salary, right? So, which means that the household is getting an income, right? If you get land, if you get land, what do you pay for land? You pay rentals, which means that the owner of that land is getting an income in the form of rentals, right? If you are if you want to have an entrepreneur who comes to your business and creates business ideas for you, what do you pay? You give him a share of the profit. So, which means that the entrepreneur gets what? Gets an income in the form of a profit, right? If you want capital, what do you pay for capital? You pay interest for capital. So, which means that anyone who provides you capital is going to get an interest as income. So that's what we call the income flow. We are saying that there is a flow of income from the companies going to the households, right? We're going to go deeper into this. Don't worry if you don't get it. That's what we are going to do today for the next 20 minutes or so. Right. Then after the income flow, there is the spending flow. The same household who has received the rent, who has received a salary, who has received a wage, whatever he has received, he's going to spend that money somewhere. He's going to go and buy products, right? So he's going to go and buy some food, some cars, and whatnot. And that is what we call the spending flow. So let's go a little bit deeper into it. Right. So let's one more introduction and then we go. So where do these flows happen? Right? This production flow, spending flow, and income flow. Where does it happen? It happens in mainly two markets, in the resource market and in the goods and services market. I'm gonna come back to these markets, right? Resource market and goods and services market. Just keep them in your head. Right? We'll come back to them. So I want to explain this diagram first, and then we go back to that. So this is an example of what we call a simple economy. Right. So remember, we said in an economy, there are households and there are companies. You can see in this economy, there's no government, right? There's no Namibia or Botswana or Zimbabwe. There's just South Africa, right? Households and companies in South Africa. So what happens, what we are trying to explain, is when we say the production flow is this red line. You see that red line? That's the production flow. I am saying the households who own the land, who own the labor, right? They go to what we call the market for factors of production. And they supply in this market. They supply the land, they supply the labor, they supply the entrepreneurial skills and the capital, right, to this particular market. So they are the suppliers of the factor market because they are the suppliers of the factors of production, right? So in order for them, when they supply these things in this market, they are paid something in return. What are they paid? They are paid rentals, they are paid wages, they are paid salaries, and etc. So that is what you are seeing here, that green arrow. That's what we're trying to talk about. So again, let's start again. So households supply factors of production to the factor market, right? Number one, right? Firms or companies, they consume factors of production, right? They go and buy factors of production from the factor market. Once they do that, what do? They produce goods and services. So once they produce goods and services, they supply goods and services to the goods and services market, to the normal market that you and I know, to the goods and services market. Once they supply goods and services to the goods and services market, what do households do? They consume the goods and services that are in the goods and services market, right? So that is your production flow, right? Then we said that there is a spending flow. So what is our spending flow? Our spending flow is when we see households, right? We see households putting money into the what? Into the goods and services market. They go and spend money in order for them to what? In order for them to get the goods and services. And what is our income flow? Our income flow is when we see firms give an income to the households. That becomes our income flow, right? So firms definitely they spend money in the market for production, but that money becomes in income for households. They spend money here to this market, but that money becomes income to the what? To the households. Same also is the households. The households spend money in the market for goods and services, but that also becomes income to the firms, right? So you will find some exam questions that will say that the production flow goes in the opposite direction of the financial flows. What are the financial flows? The financial flows is the spending and the income. That's the financial flows. So they go in the opposite direction of the production flow in order for us to satisfy the market. So let's go back to those things that I said, just take heed of them. So what was I saying? So if the lecturer asks you what is the resource market, the resource market is the market where the factors of production are sold. That is the resource market. Who is the supplier in the resource market? It is the household. Who is the consumer in the resource market? It is the company, right? If the lecturer asks you what is the goods market, the goods market is the market in which goods and services are sold. Who is the supplier in the goods market? It is the company. And who is the consumer in the goods market? It is the household. You can see that they are literally like opposites of each other. And that is something that can be tricky for you if you did not capture it in the what?
Sorry, James, can you just repeat?
All right. So we are saying If the lecturer asks you what is the resource market, this is the market in which all the factors of production, all land, labor, capital, and entrepreneurial skills are sold. That is the market where those things are sold. For example, the labor market is a resource market. For example, the land market is a resource market. So the supplier in the resource market is the household. The consumer in the resource market is the company. Then the goods and services market, this is the market where we sell and buy your normal products, your television, your books, your food, and etc. And the supplier in that market is the company, and the consumer in that market is the households. Right. So that is the simple understanding of this diagram. Now we want to make the diagram a little bit more complicated. We want to introduce the government into this economy. So when we introduce the government, what is the impact of the government within that particular economy? So what you will notice very well, remember it's a say, okay, so there's something that maybe I did not mention. Let's go back to the flows. So in economic theory, of course, remember this is theory, practice is different. The flow of production is the same, it is equals to the flow of income, it is equals to the flow of spending, it is equals to the flow of production. So whatever is produced, right, is if the value of production is 4 billion, which means the value of spending will also be 4 billion rand. It means the value of income will also be 4 billion rand, right? You will notice this when you do what is called macroeconomics, when we measure GDP. If you know the gross domestic product of South Africa, if the GDP of South Africa and whatnot, there are different ways of measuring GDP. So if you measure GDP using production, you should get the same answer like if you measure GDP using spending. You should get the same answer if you measure GDP using the incomes within an economy, because those things should be income. They should be equal. But however, there are some things that make those things not to be equal, which is what we want to talk about now, which is when we introduce the government. So when we introduce the government, this is what is going to happen, right? So remember, the household, right, supplied labor to the what? To the company. And the household, for example, let's say was paid 100,000 rand in 1 year for the labor that he supplied. But guess what? The government has got a 10% tax rate. So which means the individual can only spend 90 rand, right? 90,000, sorry, 90 rand, 90,000. And then the 10,000, which is 10%, goes to the what? To the government as a tax. So we then say in economics, when we introduce the government in the economy, we have a leakage from the economy in the form of taxes. So the introduction of the government within the circular flow of income introduces a leakage which is called taxes. That's number one. But the same government also, right? Remember, it has got grants, right? They are the elderly people. They are not working, but they are receiving an income from the government, right? There are different unemployment benefits, right? If you are not working and you are registered, you are going to get something from the what? From the government. You have not worked, right? You have not earned any income, but the government is giving you an income through what we call social transfers. So that becomes an injection into the circular flow of income. So the government has a leakage in the form of taxes, but it also has injections in the form of social transfers or grants within our circular flow of income. Right. The same government also interacts with companies. How does it interact with companies? Again, it taxes the companies, which becomes what? Which becomes a leakage from the system because it's taking money out of the circular flow of income through taxes. But the same government also, because remember, the government wants, they want chairs, they want computers, and etc. So what do? they purchase products from the companies, which means that they put money back again into the circular flow of income. So if you notice here, that's how the government interacts. The same government again is just that it will become too complicated. But I want you to think the same government wants labor, it wants employees. So what is labor? Labor is a resource. Who has labor? It is the what? It is the households. So which means the government is going to take labor, right, and pay an income for that labor, right, that it has taken. It has taken a resource out of the market, but it pays an income for that particular resource that it has taken out of the what? Out of the market. So the government interacts in all of the markets. It interacts in the factor market, it interacts in the goods and services market, it introduces leakages through taxation, but it also introduces injections into the circular flow of income through social transfers. Right? Again, we make it a little bit more complicated, right? So now we've got the government, we've got the households, remember? We've got the companies, we've got the government. Remember, we said that there are four. We also have got the rest of the world. Then I also gave you here financial markets, right? So what happens in this complicated scenario, right? So we have already talked about how companies and households relate. We've already talked about how the government and companies relate. Now let's talk about the rest of the world, which is the foreign sector. So the foreign sector interacts again through the factor market and the goods market. What do? So we have products here in South Africa that we consume that are not produced here in South Africa. For example, some of the cars that we have in this country, they are not produced in South Africa. Some of the computers that we have, some of the phones that we have, they are not produced in South Africa. So this means that we are importing products from the what? From the rest of the world. And when we import products, do we gain money or do we lose money? It's a question to you guys. When we import a product from the USA, from Europe, do we gain money or do we lose money? It's a question.
We lose money.
Lose money, James.
Yes. So if we lose money, it means it is a what? It is a leakage.
Leakage.
Yes, it is a leakage from the what? From the system. Money is getting out of the system. So whenever money goes out of the circular flow of income, it is a leakage. So when we import, yes, we have a product, but we've lost money. So that becomes a leakage. So the interaction of the foreign sector with our circular flow of income creates the leakage of imports, right? Then also remember, in South Africa, we are privileged to have, so many manufacturing plants, assembly plants of, Toyota and all of these companies. When they manufacture these cars, guess what? They sell them across Africa, right? So we export. We produce here citrus fruits and whatnot. We export fruit to the US and all of those sort of things. So when we export fruit out of the country, do we lose money or do we gain money? When we export fruit, when we export cars out of the country, do we lose money or do we gain money?
We gain money.
We
It is an injection.
money.
Right. So if we gain money, it becomes in what? It becomes
An injection.
An injection into our circular flow of income. So again, the foreign sector introduces injections in the form of exports. So exports are injections and imports are leakages from our circular flow of income, right? So that is interaction through the what? Through the factor, through the factor market, through the market for goods and services. Is the same thing also with the factor market. Is the same thing. Just think of it. If we are saying we're exporting labor, right? That's the factor market. If South Africans go and work outside of the country, we gain money because they get a salary and they send the salary home to their families. So if we export labor, we are going to get money. We're going to see financial flows to us. If we export land, we see financial flows to us. If we export entrepreneurs, we see financial flows to us as a country. So that's the factor market, right? So same thing again, if we import labor, right, we are going to see a leakage because it means the people that we're importing into our country, they are going to what? They are going to work in the country, yes, but that money, they have to send it back home to take care of their families. So that becomes a leakage from our what? From our financial flows, right? So that is the how the foreign sector interacts with the secular flow of income. Right now, I also want to talk about financial markets, how financial markets interact with the secular flow of income. Now, let's use the households. I want you to think about the households. Remember, he has a salary of 100,000, right? Salary is 100,000. So, if we are saying that production is equals to income is equals to spending, we expect this person to pay to go and spend the whole 100,000. But if they don't spend the 100,000, what do? They save. If they save 60,000 and put it into the financial markets, which means that 60,000 has not been spent, it is now a leakage. So the financial markets introduce leakages in the form of savings. So savings within the secular flow of incomes are a form of a leakage, right? Also, companies, if company wants to produce something, right, they can go and borrow money from the financial markets. If they go and borrow money from the financial market, it becomes a what? An injection into the secular flow of income. So, ladies and gentlemen, this is how the secular flow of income happens within an economy, right? So, just to reiterate, right, what we have talked about. Number one, we said that there are four major role players within the circular flow of income. We said households, government, businesses, and foreign sector. Then we said that there are two major markets within the circular flow of income: the product market and the resource market, right? Or the market for factors of production, right? Those are the major markets. However, there are also two minor markets that I did not talk about, right? The minor markets is the foreign exchange markets and the financial market that we're talking about earlier, right? So those are the minor markets within the secular flow of income: the foreign exchange market and the financial market. Right? And how do these things interact? We said households and businesses, they exchange productive resources, right, for income, and they exchange products for revenue or for spending, right? And then we said government interacts with households and businesses through taxation, transfer payments, and purchases of products that the government does. And then we said the foreign market can interact with any of these things through either the factor market or through the product market that is within that economy. So that is the secular flow of income. So for the rest of this class, for the next 20 minutes or so, we just want to do some revision over the units that we have covered. We just want to do maybe 10 or so questions, past exam paper questions, so that you can just have a few of some of the questions that you may be asked in the exam, so that you can understand whether you are picking up economics or not. All right. So I picked up this from past exam papers, right? So you can see that this was question number 25, right? So question number 25 says here, this is opportunity cost. Remember our lecture number 1 and lecture number 2, we did talk about opportunity cost. Right. So it says here, Daniel Matthews is a footballer in Sweden. He received a fine of 2.5 and a 2-match suspension for the use of performance-enhancing drugs. Right. So he was charged 2.5 and told he was not going to play for the next 2 matches. Then Daniel receives a match fee of 5,000 per match from Sweden footballers, plus additional appearance fee of 10,000 a match from Adidas. He also pays per match for comprehensive insurance injury. In opportunity cost terms, the cost of this incident for Daniel is what? So remember, I told you that there are 3 ways of opportunity cost. There are simple questions where your lecturer will say, if someone is choosing between a jean and a t-shirt, what is the opportunity cost? Those ones I don't expect you to struggle. Then there are these questions where you're supposed to do calculations. Then there are some questions where it's a diagram. You're supposed to calculate from a diagram. So those are the 3 types of opportunity questions that you're going to get. So let's do this one, right? So how do we go about a question for opportunity cost such as this one? So when we are calculating opportunity cost, we are saying the decision that Daniel made to inhale or to make use of performance enhancing drugs, what did it make him to lose? Because remember, opportunity cost is when I make a choice, what is the alternative that has been forgone? So the alternative that has been forgone by Daniel Matthews is the 2 matches that he could have attended. That's the alternative forgone, right? Because he made the choice to use performance enhancing drugs, right? The alternative forgone is the 2 matches that he what? That he is not going to attend. So what becomes the cost, the opportunity cost, if we were to calculate it? So the way that we calculate the opportunity cost here is we are going to look at the income that Daniel was supposed to receive versus the expenses that are related to this particular endeavor. Right? So what is Daniel's income here? He was supposed to receive 5,000 rand per match multiplied by 2, which is 10,000 rand, right? Daniel receives a match fee of 5,000 rand per match. Then he was supposed to receive 10,000 rand per match multiplied by 2, which is what? 20,000 rand, right? From Adidas, right? So that is the income that he was supposed to receive. But also because of the decision that he has made, there are certain expenses also that are tied in to that decision that we have to also consider. But on this income there is something that is missing that I haven't included yet. So remember, this income in terms of the match appearance fees, right? He was going to receive it, but he was also going to receive it net of the insurance that he pays per match, right? So, which means if we say net of the insurance, so the insurance is what? 500 rand multiplied by 2, which is equals to 1,000 rand, right? So this means that in total, we are going to have, that's 30,000, 29,000. So 29,000, right, is the actual income that he could have benefited if he had not made the decision. However, when he made this decision of performance enhancing drugs, there is also a fine that he was charged for making that decision. So that fine that he was charged for making that decision is money that he has lost that he could have kept. So again, it's part of the opportunity cost, because this expense of 2.5, this money that he has lost, he could not have lost it had he not made this decision. But because he made the decision to use performance enhancing drugs, we are saying this 2.5 that he had saved up, that was in his account, that was sitting there, it also becomes part of the consideration that we should put there, and that will end up with 31,500 in total. I will explain again. right? So we are saying this guy with Daniel Matthews makes a decision. If he makes the decision not to use performance enhancing drugs, how much money will he have in his account? We are saying he will have 31,500 in his account. That's what we are saying, right? This 31,500 is made up of two things. It's made up of 29,000, which is future income if he had played in those games, plus 2.5, which is savings. He would have saved some money. But because he made the decision, number one, he lost the 29,000. Number two, he lost his savings in the form of 2.5, which he has to pay for the what? For the fine, which gives us a total of 31,500. So that is how you can calculate opportunity cost. I think there's another question again that we're going to do for calculation of opportunity cost. All right, let's do next question. All right.
Sorry, James.
James.
Hi. I've got a suggestion, right? If it'll work. Okay, so obviously you've highlighted the answer. So if the answer is there, were basic or I did, I was just working to make sure that I get to the 31,500. However, had you not selected the answer, right? Perhaps we would have, just made the calculations to I don't know. I find that the answer is leading. Do you know what I mean? So I don't know if it's possible to just hide the answer so that we get to work out and then basically test if we can get to the correct answer. I don't know if I'm making.
I get what you're saying, but unfortunately, because we have to manage our time.
I think it's a time issue.
Because we have to manage our time, otherwise we'll never finish the revision. What I usually do, because remember, this is still a free class, what I usually do with some of these things is I send them in advance without the answers. Then you work them out yourself. And then when we come to the class, we show you what the answers were supposed to be. That is once you've worked them out yourself. So I have a lot of question papers that I send through to the students that are in my paid groups that I'm going to send through, which you can work out. And then when we get to the class, you can then compare with your answer. But for today, just because of the time, unfortunately, we can't manage to hide the answers and ask you guys to work. It's going to be a long time for us to finish. Just for today, bear with me. But for the future, I will send the questions in advance. Because usually what I do is we do some units and then I send you questions. And then we have one lecture where we go through like 10, 20, 30 questions. So I send those questions in advance. You work them out from the units that we've covered, and then we discuss them in the class. But for today, just bear with me because I just want to make sure that we cover a little bit of something. All right, that's fine.
James.
Uh-huh.
Yeah, I see there you also added that 2,500 as a fine for what he did. So let's say there's no any suspension. Why do you still add it or as a money that he lost if he didn't get any suspension? Shouldn't it just be 29,000 excluding 2,500? Because in any way you only lose that money for the misconduct that he has done.
He paid this money.
He paid this 2.5,
yes, he
right?
paid this 2.5, yes. It says received. I know the word received there is deceiving, but he paid this money. So it's money that he lost. It's part of the opportunity cost. Because if he had not done the drugs, this man would still be in his account. But because he did the drugs, this is lost. So it's part of the losses. That is part of the...
Yeah, what I'm saying, if he didn't do the drug stuff, still he wasn't supposed to be 29,000.
Okay, if he did not do the drugs, think of your bank account. Let's say right now in his bank account, how much money does he have in his bank account? He has 2.5, right? In his bank account right now, before he does the drugs, he has 2.5 in his bank account, right? He does not do the drugs. At the end of the day, how much money does he have in the account? He has 31,500, which is 2.5 that he already had, plus 29,000 that came from what? From working those two matches. So he's 31,500. Then if he chooses to do the drugs, how much money does he have in the account? Zero. Because he loses the 29,000 plus he also loses his savings. Think of it that way. Does that clarify that for you?
All right, thank you.
All right, sure. All right, so next question here. It says, study the diagram below and answer the question. So it says here, the production possibility frontier is concave to the origin because, remember, we said that there are three shapes of the production possibility curve. We said it can be concave, it can be linear, or it can be convex. We said it can be increasing opportunity cost, it can be constant opportunity cost, or it can be decreasing opportunity cost, right? Concave means increasing opportunity cost, right? Then constant, linear means constant opportunity cost. And then convex means decreasing opportunity cost. So our answer there is going to be the opportunity cost of food items in terms of films increases as more films are produced, which represents increasing opportunity cost. That is the reason for that particular shape, is that as we exchange more and more, the opportunity cost is going to increase. Right. So it comes from that particular type of questions. So you now see what I was highlighting when we were going through the lectures, when I was telling you this is an exam question, this is an exam question, this is the typical, that's where those questions come from. So each and every time, each and every exam, you will just find a different way of asking the same question. Sometimes it is a diagram, sometimes it is not a diagram, sometimes, but there's always a question that looks something like that. Right, let's go to next
James,
one.
can you just repeat when you said as we exchange more and more? What was that? Please just repeat that sentence.
Okay, remember when we are dealing with opportunity cost, we are dealing with two things, right? Food versus films. I can either produce food or I can produce films, right? So as I exchange more films for food, the opportunity cost is going to increase. As I exchange more films for food, the opportunity cost is going to increase. Remember, we even talked about the reason why that is, because we said resources are not easily interchangeable. That is the reason, right? Okay. So here another question.
Oh, James, I think now you're on a very speed now. You're moving on another level. I didn't get anything here. Can you reiterate the whole diagram? Because I just hear interchangeable, but I didn't get anything, nothing.
Okay, remember this is a revision, guys. We went through these things. So I expect not to revise the whole notes again that we went through. Remember, guys, this is the
That's correct.
we went through this. We actually explained the reasons behind that. So if you did not attend those lectures, please watch those videos again, because we will not finish if we have to explain the whole concept again within what we're doing revision. But what I was saying is that opportunity cost can either increase or can be constant or can decrease. And we're saying increasing opportunity cost. The reason why opportunity cost increases is because resources are not interchangeable. If you go back to the original video, I explain in detail what I mean when I'm saying resources are not interchangeable. So that is the reason why opportunity cost increases, or that is the reason why we have a concave shape in terms of the diagram. All right. Then this one here, study the production schedule below and answer the question that follows. So this one is a little bit interesting again. So you can see we have got, is this what I want? Okay, yeah, it's fine. So we've got in the table above, the opportunity cost of increasing food output from 17 to 22. What is it? Right. So we've got food output here, right? So it means that we are saying we are producing food. We are producing 25, I don't know, maybe they're beggars, 25 beggars, 22 beggars, 17 beggars, and whatnot. And then here we've got films. Again, we're saying we're producing 0 films, 9 films, 17 films, 24 films, whatnot. So that's the output that we have. How do we calculate opportunity cost when we have a table such as this? So the first thing that we do is we need to look at what are we moving to and where are we moving from. So it says here, increasing food output. So let's go to food output, right? So from 17 to 22. So from 17 to 22, right? So if at 17, this is food, right? Food at 17, right? How many films did we have at 17 food, right? We go and check at 17 food, we check at the films output. Do you notice that the films output is 17 also? Are we together here? Did I lose anyone here? Right?
No,
We are
we're
here,
listening,
James.
James. We can
Okay.
hear you.
So food was 17, right? Film was also 17 there. Then food changed to 22, right? Food changed to 22. How much is film now? It is 9, right? Film is now 9. So what has happened? We have 22 minus 17 is 5. So we have gained 5 beggars, or we have gained 5 food. But how much did we lose in terms of the films? So we were at 17 before, and now we are at minus 9. So which means 17 minus 9 is going to give us 8 in terms of the films that we have lost. So we are saying that the opportunity cost of moving from 17 food to 22 food is going to be 8 films. For us to gain 5 beggars, we had to lose 8 films. Are we together? Did I lose anyone here?
No, we're
Very
together,
clear.
James.
All right, wonderful. Right, so let's move on to the next one. All right. It says here, microeconomics is concerned with issues such as, so remember the definition of microeconomics. We said micro, we are looking at individual stuff. Macro, we are looking at the whole economy of the country. So you can already see there that this one, unemployment in South Africa, that's the whole economy. So that's macro. Maintaining a strong level of economic growth, that is the whole economy, that is macro. This one, level of inflation in the economy, that's the whole economy, that is macro, MA, right? But this one, the demand for bottled water by individuals, this is looking at specific situation. We are looking at bottled water. So that becomes an individual issue, that becomes a microeconomics issue. So it stems from those specific definitions, right? So I hope you see what when we were going through the lecture, I was telling you, your lecturer will ask you about this. Your lecturer will ask you. So these are how he asks those particular questions. Right, let's see another one. Which of the following is not a basic decision that all nations must confront? So whenever we are talking about basic decisions that all nations must confront, we are talking about the 3 economic questions. That's what we are talking about. The 3 economic questions. Remember, the 3 economic questions is what to produce, which is this one, how to produce, which is this one, and for whom to produce, which is this one. So which means this is not a basic economic question, right? This is not a basic economic question. Our 3 basic economic questions have to do with what do we want to produce, how are we going to produce it, and how are we going to distribute it, right? So it's a very popular question, but it will not come like this. It might come differently, but it's asking about basically the same issue. There's always, in each exam, there's always a question that talks about this economic problem. All right, next one. Again, this is talking about the economic problems. If you still remember, we said that for you to answer the three economic questions, we said that there are three markets, right? So it says a market economy, unlike a command economy, the people who receive the goods and services that are produced are those who what? So in a market economy, remember, we said that there is a market economy, there is a command economy, and there is a mixed economy. There are three types of economies: market, command, and mixed. And we say that a market economy is whereby there is the willing buyer, willing seller, invisible hand. And we say the command economy is where there is a central planning economy, a central planning authority. And we say that the mixed economy is whereby we combine both the market and the command. So in a market economy, the person who is willing to pay the highest price is the one who gets the product, because it's willing buyer, willing seller. No one is forced to do anything. So you might find something that is very expensive, but still people will buy it. But if you go to a command economy, there's nothing like this in a command economy. In a command economy, usually we talk about rationing, right? Or issues of political power, right? Or the government will say, these guys need it more than you guys, so we're going to give it to them. So for example, I know, is it Libya, if I'm not mistaken, where they had this program whereby if you get married, then they give you a house. So that's a command economy. They're not saying you have the highest amount of money, but they're saying, no, these guys are starting a family, so they need a house more than anyone else. So if you get married, you get a house. That's a command economy, right? But in a market economy, the person who gets a house is the person who's willing to pay the highest price for that particular house, right? So that's command economy. That's market economy, sorry. All right. Then we've got this diagram here. All right, so let's see what is needed here. Which of the following is true combination of, okay, which of the following is true about the combination of mops, brooms represented by point E? So remember from our diagrams last week, right? Point E, we said that is what? That is unattainable, right? That is an unattainable product if we are at point E. But let's look at our answers and see what it is saying. So it says a point E is efficient. No, it's not, because it's not attainable. Efficient is when you produce on the production possibility curve. That's efficient, right? Then B says point E is attainable if the economy uses more of its available resources. That's wrong. Point E is attainable if the resources increase, not if we use more of our available resources. It's only attainable if the resources increase. Just take note of that. I know this answer was very, very tricky for some, right? It is only attainable if the resources increase. But if the resources do not increase, then it is unattainable. So B is wrong. Then C, point E is unattainable if this economy becomes more efficient. This is correct. Remember, we said efficiency is producing on the PPC. So if we are producing on the PPC, it is still unattainable because it is outside of the PPC, right? And then D, point E is attainable only if more resources become, wait a minute. Did I make a mistake? Point E is attainable only if more resources become available or technological. Oh, interesting. That's a new one. I think this answer is wrong here.
I think D is the answer.
Yes, D is the answer here. D is our answer here. D is our answer. Just give me a second. I just want to check again. C. Why did I say C was correct? Point E is unattainable if this economy becomes more efficient. It doesn't really make sense. Okay, I see why I would have thought so. But anyway, point D is the answer here. Please take note, this is incorrect. I'll have to correct it on my slides. Point D is the answer. Point E is attainable if more resources become available, right? We are saying that if we get more resources, if we get more land, if we get more capital, if we get more entrepreneurial skills, then we can get to point E. Why are we saying so? Because we are saying that if more resources become attainable, then we are going to have another PPC. We're going to have PPC 3 here because we have got more resources. I'll correct this in my notes. Sorry for that. I think I was rushing when I did it. All right. Which of the following is purchased in a product market? Right. So remember, we said that there is a product market and there is a resources market. This is the question here. There is a product market and there is a resources market. So when we are dealing with a product market, we are dealing with goods and services. But when we are dealing with a resources market, we are looking at the factors of production. Right. So this one wanted you to be able to identify which of these are factors of production. Right. So remember, we said factors of production are natural resources. Land is a natural resource, right? Sorry. Factors of production are land, labor, capital, and entrepreneurial skills. Right. So this is labor, right? This is labor, right? So it's not found in the product market, right? This is land. It's not found in the labor market. This is natural resources, again considered as land. It's not found in the what? In the product market. These are all found in the resource market. The resource market is the market for factors of production. But this one, a cell phone service, that is something that you can find in the market for goods, for products and goods. Right. Another one here, opportunity cost calculation. These questions, remember, guys, these are from past exam papers. These are not like assignments, but this is exactly questions from past exam papers so that you can see how to answer the questions in the exam. So it says here, the opportunity cost of increasing the production of pens from 7 to 14 units is how many pencils? So remember what we did last time? So we are saying the opportunity cost of increasing production from 7 to 14 units of pens. So let's go under pens. We are starting at what? At 7 here. At 7. That's where we are starting. So at 7 pens, how many pencils did we have? We had 10 pencils. Right? Right? And then at 14, right? At 14 pens, so 14 there. How many pencils do we have? We have 6 pencils. Right. So how many pens did we benefit? Which is 14 minus 7, which is 7. So we benefited 7 pens. How many pencils did we lose? Which is 10 minus 6. We lost 4 pencils. So in order for us to gain 7 pens, we had to lose 4 pencils. All right, that is why the answer is B over here. All right, is it clear? Anyone confused? I know calculations can be confusing. Anyone confused?
It's clear,
It's
James.
clear.
Please repeat.
Please repeat it, James. Please repeat it.
Okay, it's fine. So again, we are saying here, start from the starting point. Where are we starting? We're starting with 7 pens, right? So at 7 pens, how many pencils do we have? Pencils. How many pencils do we have? If you check there on the diagram,
10.
7 pens is 10
10.
pencils, right? Then we move to 14 pens, right? At 14 pens, how many pencils do we have?
6.
We have
6.
right. So how many pens did we gain? Right? We gained 7 pens, which is 14 minus 7 is equals to 7 pens gained. That's what we gained, right? But how many pencils did we lose? We lost 4. 4 pencils. So the opportunity cost of us gaining 7 pence is 4 pencils that we had to lose. All right? Okay, yes, another question. So I'm just trying to watch my time here. Don't want us to go past 1/4 past, otherwise it'll be too late. All right, use the figure below to answer the question that follows. So this is the circular flow, the one that we were just doing right now, right? So it says here, which of the following statements are correct? Which of the following statements are correct? So it means you're just labeling this diagram. That's essentially what it is. So remember what we said. We said that if we are looking at the factor market, right? If we're looking, all right, let's start with the households. If households go to the goods market, what do? They spend, right? If you go to Spa right now, you are going there to spend at Spa. So households spend money in the goods market. They are spending money in the goods market. The money that they spend in the good market, what is it to companies? Remember, companies go to the goods market and provide products. So if they sell their products, what do they get in return? They get an income from you as the household. So it means that the companies get an income from the goods market, from the spending that you've done there. And what do companies do when they go to the factor market? When they go to the labor market, they want employees, they spend money in the what? In the factor market. And when they spend money in the factor market, you as the household, when you go to the factor market, what do you get? You get income.
Income.
From the what? From the factor market. So that's basically it. So I'm saying here 1 and 3. 1 and 3 is spending. So it's leaking. 1 and 3 are spending according to what the answers are. So the idea is you have to understand the various interactions. And here, something that is important, the direction of the arrows, guys. The direction of these arrows, it is very, very important. Because if the arrow was going this way, this was a different thing. Sorry. If the arrow is moving from the household to the factor market, this is the household supplying labor to the factor market. But the arrow is moving from the factor market to the household, which means it's the household paying is the factor market paying the household their income. So that direction is also very important. Of course, if the directions were different, the answers were also going to be different. If the direction of these arrows were different, the answers were also going to be different to match that direction. All right. I think let's do our last question. Okay, same concept. I think we did this one. We did this one already. Okay, so this is what happens. Just a bit of an advice.
You can do it again.
All right, I'll do it again, don't worry. I just want to explain something before I do it. Just a bit of an advice. So, because I take these questions from different question papers, so this means that this question appeared in 2 different question papers. That is why I took it. I did not notice it when I was taking, but that's what it means. So I know, like last semester, after we had done our revision, I got a message from the students. They posted a message in the group and they said, thanks, James, the revision that we did. Yes?
Is production possibility curve the same as production possibility frontier?
Yes,
the same thing?
Yes, something. Yes.
Okay.
So I got a message from the guy saying, James, out of the question papers that we did, because the question is 25 marks, it's 25 questions in the exam. They said that 14 of the questions that we had done during the revision were exactly in the exam. So which means that essentially before they even attempt the other questions, they've 14 out of 25 because we did those questions in the revision. So whenever I say we have a revision class, I know sometimes you might not be able to attend the normal classes because you are busy and all of that, but try to attend as many of the revision classes that we have as possible, or at least watch the recordings of the revision classes because they are 100% going to help you with the exam. Because I can tell you, half of the exam, you would have already done it in the class, because as we do these questions. All right, anyway, let's, like our friend requested here, let's just redo this question again. So the question is, study the diagram below and answer the question that follows. The production possibility frontier is concave to the origin because, so they want the reason why the production possibility curve is concave. So remember from our theory, we said that there are three shapes of the production possibility curve, right? There are three shapes of the production possibility curve. It can be concave, right? It can be linear, right? Or it can be convex. Those are the three shapes that you get. And we said that it is concave because of increasing opportunity cost, right? Because of increasing opportunity cost. Then we said it is linear because of constant opportunity cost. And then it is convex because of decreasing opportunity cost. So those are the reasons why they are shaped the way that they are shaped, right? Because opportunity cost can either increase, be constant, or decrease. The normal opportunity cost increases. That's the normal one. It's always concave, it always increases. But because this is an exam, they'll give you different choices, right? Then we highlighted that the reason why we say normal opportunity cost increases is because resources are not interchangeable. Just think about it this way. The resources that you use to produce food and the resources that you use to produce films, they're different. You cannot really take the resources. For example, for food, you need wheat. So are you going to take wheat to produce films? You see, it's difficult for you to take wheat to produce films. So that's what we are saying. So because of that, it becomes difficult to convert the resources that were being used to produce food, to convert them into fuel. It's possible, but it becomes more and more difficult. So that is why opportunity cost ends up increasing. So because of that, the answer then becomes D. The opportunity cost in terms of films increases and becomes more the more and more films we are producing. What are we saying? We are saying that as we move, let me do it this way. As we move on this diagram here, as we move from this point where we had 0 films to this point where we have got 20, 30 films, as we move in this direction, right, we are going to see increasing opportunity cost. As we move from the origin, some questions will say, as you move from the origin, you are going to face increasing opportunity cost. For you to produce more films, you are going to need more and more resources from the food output that you had. So that is the reason why the shape is shaped in a concave manner, right? Because of increasing opportunity cost, which simply means that as we increase the production of film, we are going to need more and more resources. It's going to cost us more and more. Why? Because we cannot easily interchange the resources that we have been using under the food production. All right, so ladies and gentlemen, this brings us to an end. And like I said, that this is the last free lecture that I'll be sending to the main groups. From tomorrow onwards, I have created private groups for those that are interested in these classes. Please reach out to me if you have not been added to those private groups. Just reach out to me so that I can add you to those private groups if you are interested in those classes. Remember, there is a cost attached to it. It's 800 Rand for each module for the whole semester. You can pay in installments. You are allowed to pay in installments. So what we do in the classes, number 1, we go through the study guide like we are doing. Number 2, we do revision, just like we're doing today. For each module, we do revision classes where we go through past exam papers. Then number 3, the assignment or the quiz that the lecturer provides for you to do during the semester, we do it together in class so that at least you get 100% or at least 95% or something like that, right? So we also do that. Then we do past exam papers at the end of the semester to help you just get a little bit better in terms of preparation for the exams. I know that the cost may be expensive, but I trust that the installments will help you so that you can spread it out. We are reasonable people. Just reach out to us and then we can see how we can spread out the installments for you. Then you don't have to do everything. I know there are certain modules that are maybe easy. Maybe you are very good at management. James, I don't need management. But this economics, I need economics. Or maybe you're good at economics, but you are bad at mathematics. Then you just join for the one for mathematics if you're bad at mathematics and etc. So reach out to me and then we'll see how we can add each other out. So like I'm saying, from tomorrow, the classes will be running. So make sure that you have reached out to me so that we can see how we can help each other out. Then advanced diploma students, remember, we are doing assignments from tomorrow evening for advanced diploma students. We are doing assignments, the case studies from tomorrow night. Any questions before I go?
As long as I can pass, James, money is not a problem.
Yeah, you would definitely pass. Definitely pass.
James,
We do
I just wanted to find out how many questions are there in a KCQ since it's an hour-long exam.
It's usually 10 questions, but sometimes it can be 20. But usually it's 10 questions. But
Clearly they're critical.
sometimes it can be.
No, we need to
So
start.
James, we're gonna go through the exact KCQ that they're giving us because, or you giving us other examples. We're going to
go
through our exact one.
We are going to go through it.
See you tomorrow, James. We're in class tomorrow.